Well, hello, everyone, and welcome to the Benjamin Z. Miller Investor Networking Group. It is such a pleasure to see everyone today. I'm happy that everyone was able to come. We have a fantastic presentation that we're going to go over. We're going to be talking today about retirement accounts and investing. This is going to be specific to the United States and a type of retirement account in the United States called a self-directed individual retirement account. And the reason that this is so beneficial, even if you're not from the United States, even if you're not a US citizen and you just are in a situation where you're looking to do some business deals and you're looking maybe for capital for your business, you can reach out to people that have these accounts and you can present business opportunities to them that they may have never thought of. So you can get access to a lot of potential capital here if you know the right way to approach them. And I'm going to show some actual examples of what you might say, how you might locate them. So we'll go ahead and start here. And first of all, let's talk about the advantages of United States self-directed individual retirement accounts. There's really actually several advantages. One of the advantages is that you can get money for your deals. So if you are trying to not be a passive investor, but you're an active investor, that maybe you're acquiring assets, maybe you are purchasing businesses or you're purchasing real estate, whatever it might be, you can get money for your deals. And you don't even have to be a US citizen. That's something that some people aren't aware of. We hear about the wealth of the United States and how there's a lot of money in the United States, but how do you actually get any of that money into your investments? Well, we'll talk about that here. So with this, you also, if you have the account, if you have the account yourself, if you have opened a self-directed IRA account, you can benefit from tremendous tax advantages. So if you don't already have one of these accounts, certainly if you're a US citizen, and in some cases, even if you're not a US citizen, you can open one of these accounts. But it allows for all sorts of tax advantages where you can avoid taxes. And then the third advantage is the United States is a very litigious society. Oh boy, if you're experienced in business, you have been sued, not just one time, but many times. You get sued all the time if you're a US business person that's really doing a lot of business. And one nice thing is by putting assets into a self-directed IRA, those assets are in a separate area that a judgment creditor, someone that wins a lawsuit against you, is not going to be able to take your asset. They're not going to be able to take your asset. So these are some of the advantages to it. Now let's talk about how much money is there. Okay, this is just a chart that's to kind of give you an idea of how much money there is in these retirement accounts. If we look at the year 2020, there was $10.29 trillion in these retirement accounts. And I saw the numbers before today. It's up to close to 13 trillion, if I remember right, that's in these retirement accounts. So there's no shortage of cash. There's no shortage of money in these accounts. You just got to know the right way to knock on the door to get the interest of a potential investor. And that is so, so important. So now let's take a look at what does that mean, a self-directed IRA versus an IRA? If you're from the United States, you probably have heard of an IRA, an individual retirement account, because all the big companies, if you work at Intel, if you work at Coca-Cola, if you work at some big company, you have an IRA. And the difference is an IRA, that's just kind of for the one that is going to do publicly traded stocks and they've got something going on. But a self-directed IRA, that allows you to invest into real estate. It allows you to invest into all manner of things. But in order to do that, you have to open the account. And there has to be what's called a custodian. So a custodian is actually the one that acts on your behalf to make the investment. So they will sign the documents to make the investment, and you open an account with a self-directed IRA company, and I'll show a few examples of how that works. But notice here in this illustration, because I'm showing something that's very important, but it's a very small little difference that most people don't notice. You see here where one option is you could have a self-directed IRA that purchases a property. And that is the situation there. But you also see here, mortgage company lender and non-recourse loan. Non-recourse loan. That is so important, that word non-recourse loan, because in the US and other parts of the world, there's basically two categories of loan. There's a recourse loan and there is a non-recourse loan. So a recourse loan, when you sign on a recourse loan, it's also called giving a personal guarantee. That means that if there's a problem, you're personally going to pay. If you have other assets, you're putting those assets on the line. But with a non-recourse loan, you are not doing that. And the thing is, by definition, in order for a self-directed IRA to get a loan, it has to be a non-recourse loan. So the lender is not allowed to give you a recourse loan. So that is a huge advantage, because you can talk to the lender and you can say, look, this is a self-directed IRA. I'm not allowed to, with a self-directed IRA, give a recourse or a guarantee loan. I can only do a non-recourse loan. I wish I could, but I can't. And that gives you a great thing to be able to point out some of the advantages there. So that's an important thing to think about. Okay, now let's talk about what are called prohibited parties, disqualified parties. So what in the world is this? Well, this is what's great about our laws. When you get all of these smart people together making laws, they just love to create laws. And here's the way that this works. I'm going to explain it. Now, from a distance, you would think, well, hey, it's my money. I should be able to invest it how I want. I should be able to loan the money to my son. I should be able to loan the money to my daughter. No. That's a prohibited transaction. So the way that the law works is, if you have a self-directed IRA, you can't give a loan to your son. You can't give a loan to your daughter, but you can give a loan to your brother. You can give a loan to your niece. You can give a loan to your sister-in-law. You can give a loan to your cousin. You can give a loan to your aunt. You can give a loan to your uncle, but you can't give a loan to your grandmother. So your grandmother can't get a loan. I mean, I couldn't make this any funnier than it is, but this is the way that this has been developed. This chart shows who you can do business with. Now, the interesting thing is, with a self-directed IRA, you can't give a loan to your son or your daughter, but a stranger on the street, yeah, of course, you can give that guy a loan. You may not know him at all, but so the way the law works is, you can't loan money to your son or your daughter with a self-directed IRA, but if it's some strange person that you meet elsewhere in life, yes, that is not prohibited. So this is just fascinating to see how this works. And it's tough. It's just interesting to me that they set it up this way. But here's how this relates to you. If you seek someone out that has one of these accounts and they're not your family member, they are allowed to loan you money for your deal. Oh, wow. Let's think about that for a minute. What I said there was, you can approach someone that has one of these accounts and you could say, hey, I've got an opportunity. I have a business deal. I'm going to be purchasing this real estate property. I'm going to be purchasing this business. I want you to invest into my opportunity. And you're allowed to do that. And they're allowed to do it. And they benefit from tax advantages. But if their son or daughter came to them and they said, hey, I've got an opportunity to buy a rental property or a business, they would not be allowed to do that. So that's because they're a disqualified person. So that is an interesting thing. Now, here we've got an interesting thing as well with the, can a UK person, can a United Kingdom citizen open an account? Well, by operation of the US-UK income tax treaty, any pension exemption in one country is recognized in the other. So what this means is that for individuals that are in the UK, if they are receiving a distribution from a Roth account based in the United States, that means that the UK will honor the tax-free nature of the account, which means zero tax to the HMRC. And for those of you not from the United Kingdom, the HMRC is their taxing authority. So that is an interesting thing. So now let's talk about what sort of assets could you invest in with a US self-directed IRA. So let's imagine that you have one of these, or let's imagine you don't have one, but you have something you want to invest in. Maybe you want to invest in real estate. Maybe you want to invest in a hedge fund. Maybe you want to invest in a corporate income bond. And I highly recommend Alamo Mortgage Holdings or Andesite Blue. Those companies are just fantastic as corporate income bonds. They pay hundreds of basis points over UK gilts. They are wonderful. Maybe you want to do tax liens, mineral rights. Maybe you have a tech company, a technology company, and you want investment. Well, in that case, if you're not using your account and you're not using a family member's account, in that case, you could find someone that had one of these accounts. And remember, we looked at how much money was in these accounts. We were talking about over $10 trillion sitting around in all these retirement accounts looking for a home. And it's just asleep at Vanguard. It is just asleep at Vanguard. It's just asleep in the S&P 500. It's just sitting there waiting for someone to ring the bell. You could go out there and ring the bell and you could say, hey, Mr. Smith, let me introduce myself. Let me show you what I'm doing. Let me show you how I can make you money. So that is the basics of it. So what about the advantage of a self-directed IRA for asset protection? Well, once again, if you're a lender or you're an investor in a deal, from lawsuits, you are personally protected from direct attacks, as IRAs are extremely difficult to sue. They've set the laws up where it's not so easy to do. So now let's take a look, and I want to give you guys something that's useful and actionable, not just words, but actual things you can do. So here I'm going to show you how to do this. Let's imagine that you want to try this. The first thing that you would do is you would start out by searching on Google or whatever your favorite search engine is, U.S. self-directed IRA custodians. So that would be the actual search phrase that you would type in, U.S. self-directed IRA custodians. And then you're going to get a list of companies. And as an example, I am showing a company here called Quest IRA, but this could be any company. This could be any one of these companies, but I'm going to show you how you would do this with Quest IRA. So this would be what you would do. Then the next thing you do is you think about what city your deal is. What city are you trying to get money for your deal? Where's the closest big city, and then you're going to start looking in that city for this. And I'll show you how to do it. And a lot of people don't know how to do this. And you're about to see something here that is very actionable material. And it's going to be interesting. So basically with this, I'll put this up here. In this document, I go through how do you find a private lender for a deal in the United States. So let's say that you have a project that you need to raise money for. Maybe you need to raise 100,000, maybe you need to raise $1 million, whatever it is you need to do. This would be a technique that you could use to find money in the United States. So there's a company called Quest IRA, and they actually are located in the United States. They help Americans that work at corporate and other jobs where they have a retirement account.
Most retirement accounts in America are not managed by the person that owns the funds directly. Instead, there is usually a professional manager. However, some Americans, they prefer to open what is called a self-directed IRA account, or self-directed individual retirement account. And then they use a company like Quest IRA to oversee the documentations. When someone opens an account at Quest IRA, so you've got someone that has a corporate job and they go and they open an account at Quest IRA. Then that same person then will make private loans. But when those loans are recorded, their name is not going to show up as the lender. Instead, Quest IRA and then FBO, you see where it says Quest IRA Inc. FBO, for the benefit of. And then I wrote in here, Mr. Lender. That would just be the guy's name. Number 312445, that's the account number. So Mr. Lender is the name of the person that owns the account at Quest, along with some number that identifies that lender's account number. When the loan is repaid, so somebody went and borrowed money to do a project. When that loan is repaid, Mr. Lender that owns the account at Quest IRA files a document. Actually, Quest IRA files the document on Mr. Lender's behalf called a release of lien. And that is filed to show that the debt has been paid and the borrower no longer owes this money. So you can find other results in the search that also have Quest IRA Inc. FBO, Mr. Lender number 312445. But the best document is, you want a more current release of lien. Because if you find an old release of lien that's 10 years old, that money, there's no way to know if it's still available. It likely is in some other deal. But if you find a fresh release of lien where that money just was released a month ago or 2 or 3 months ago, that is a good lead. So once you find the lender's phone and email, you're going to want to contact them and you're going to start developing a business relationship. And believe me, this works. So you would, I'm going to show here how you would actually do it. In Texas, you'd go to this website in Tarrant County, but each city and state in the United States has some similar website. Then you would do a search where you're looking for this string, Quest IRA Inc. If the IRA company was some other name, you'd do a search for, some other company, Inc. FBO, but Quest IRA's Flame Real Estate Group. And that's basically it. Then you just track the person down, develop a business relationship with them, and you're off to be able to present a deal when enough time passes.
So that's fantastic. Basically, you can find public records that show this document called a release of lien. You can see it there in the illustration. And if you look here, you can see where it says maker, Quest IRA Inc. FBO, and then John Wild. That's the guy's name, John Wild. And then, so now you know that this address, this guy has a self-directed IRA. You can look around on the internet, find the guy, and then introduce yourself. Let them know you're a businessman. Let them know you're an investor. Whatever you do, just start developing that relationship. That person has potentially could be a great business contact. So that's how that works. And then let's take a look at what do you do after that? Well, the first thing that you've got to do is you need to actually send them an email with a video. And here's why. If you just send them an email, that's okay. But there's so many people on the internet that are playing games that you set yourself apart if you record yourself on video. Because how does the guy know you're a real guy if he doesn't see you on video? Maybe if he meets with you in person, he would think you're real. But, for all he knows, it could be some guy that's some scammer in Africa. It could be, who knows? We don't know. But by putting yourself on video, when you introduce them, you can do it. So here's an example of a real deal that I made contact. I was actually doing a list of different guys and I recorded this for one guy, and it shows how I approach them. You know, you could approach them however you want, but it's a good idea when you email them to also record a little 1-minute video of yourself so they see, okay, this guy's real, you know, so they feel comfortable.
Hello, Mr. Johnson. This is Ben Miller. We spoke today on the phone. I wanted to introduce myself so you know a little bit more about me. I'm originally from Texas. I graduated from the University of Colorado at Boulder. Did a double major, economics and Russian studies. And the reason I'm contacting you is I wanted to network with you since I saw that you were occasionally active in the real estate market. I have opportunities that are opportunities I've developed by a variety of methods of advertising, putting out signs, contacting my existing tenants, asking for referrals. And I just want to try to develop a relationship with you where hopefully we can do some good business together, whatever that might be. Whether that be something where it's a wholesale deal I bring to you, maybe on a residential or commercial property, whether it be something where if you just want to earn passive income, maybe I become a borrower, you get a first lien on a property. A lot of scenarios, but I've got the experience. I've got a good track record. I've bought over the last 10 years several $1 million worth of real estate, primarily in Texas. And I'm just trying to network with people where I can do something with the extra deals that I have, rather than miss out on an opportunity. So you're welcome to contact me anytime. My number is 817-203-4160. Again, that's 817-203-4160. My name is Ben Miller. I look forward to getting to know you much better. Thank you so much.
So that's basically what you do. You find them and you reach out to them, but you reach out to them in a way where it's very direct, where they can see you're a real person. You don't have to be perfect. You just got to show them you're real. And if they see a real person and they think, hey, this is not just some guy playing around, you can get them to help with your deals. Not all of them, but some of them will, you know. And that's a great thing to do. Now let's talk about a system called Back Office. I'm going to show a really powerful system called Back Office, and I'm going to just show this. This is the system that I actually use for keeping track of information, and it's one that was actually developed by Valeri. He's an incredibly good programmer, but and software architect. Anyways, let me show this. Whether you use this system or whether you use another system, you need to keep track of the information. That is so important to have good order. There's got to be proper order.
Example of how you, after you meet some of these, after you find some of these people from the initial release of list, a database where you start to contact them. The initial contact is just going to be that you're not going to try to present any investment opportunity on the initial contact. You're just going to actually talk to them about different deals, about opportunities that are there. And this really is actually a good way to start a relationship, because actual deal, you want to know a little bit more about who they are. And in the beginning, a lot of these email. But if you look at if we look at, for example, one of these, here's trying to find out which one's real, and then you see the notes, you're just texting them, trying to get a response out of them. But this method is very effective, where it will produce results all throughout the United States, and there's no shortage of opportunities. It's just a matter of taking the action. And the same thing will work in countries, because there's always some method of recording. And there's also some method of recording when that money is paid off. So even though the particular details might change from country to country, the basic principle would work.
And that is ultimately for the simple reason that basically what happens is these are recorded. There has to be a public record. And once you've got that public record, you can see who you can find out what's going on with all of that. So that is the actual presentation for today. So we're finished with the presentation. And now what I want to do is I want to take just a few minutes and open it up for questions. I will be very happy to answer any questions that anyone has. And let's just see if there's any questions that have come up as a result of